Hey buddy, Boris Lesser, BK Force. Welcome to our BK Weekly Technicals for 10/6/10/10/2014. Where are the trades? Well, what a difference a week makes. Look at these moves in the euro. It's just been a complete move to the downside here post the NFPs today. What a massive volatility move. Basically touching the 2500. Haven't quite broken the 2500. I mean, I think we tapped it a little bit pretty much at the end of European close here, midday New York, but really haven't really penetrated that level as hard as I thought we would, given the fact that we broke a lot of levels. But we've broken so much support here in the euro. And if you kind of look at the analog here, the conventional trade here is big moves to the downside, consolidation. So we may have a little bit more consolidation. But the fact that we have now just horribly negative European data and generally quite positive U.S. data creates such a massive divergence in the trade that it now opens up the prospect of 2350, possibly even 2200. And maybe if you sort of are trading a very, very long-term trend all the way out to 120 on the euro. Near term, you could potentially have some bounces here, but it's really become a very, very strong trade. There's ultimately very little here to trip up the euro trade to the downside because there's essentially nothing on the European side that makes you want to buy euros. In an absence of that, any kind of a short covering rally becomes very problematic. So for the time being, the path leads resistance is certainly to the downside, and probably the best trades here will be just any kind of retrace shorts. So 2550, 2600, any of those levels, if you can get them, will probably offer you relatively great entries for the continuation short, unless something radically changes. I don't know, maybe Ebola goes full force in the U.S. or something of that nature. But aside from that, any kind of a tectonic shift outside of that, it's very, very difficult to imagine a euro rally of any consequence, given the fundamentals and given technicals that we have. It's a very, very powerful trade to the downside at this point. Dollar yen, though, is in many ways, I think, the key to this whole dollar rally strength, because we're looking at dollar yen here, this 110 level, and the 110 level is absolutely crucial. We poked through it in the Asian session trade, but the Asian session trade was basically a very, very weak penetration, and we couldn't hold it. We did come back all the way down to 108. That's a standard typical correction move, and now in many ways comes the moment of truth where the rubber hits the road. If we can take out the 110s in beginning of trade of next week and actually hold it, then it becomes a much more interesting trade because we could potentially now extend to like 111. 111.50, we would be taking it to a brand new level. A lot of the support for this trade really has to come from U.S. yields, and yields have not just been, because dollar yen still trades very much on yield differentials rather than growth differentials, and yields have not been as supportive as we'd like to see them. So we'll have to see if the bond market finally begins to buy the notion of higher yields and could potentially take this trade all the way through. As I said, a close above 110 would be a very, very bullish signal here for dollar yen and a general overall dollar rally. The pound collapsed today. The 60 level was very, very key. What was really interesting is this was the Scottish peak, panic level, and we sliced through it like a knife through butter. The fact that we're trading below 60-100, really a lot of negative damage. Here again, it becomes, cable is very, very possible in terms of having these kind of consolidation trades before pushing lower. But the lower trade here really is all the way out now to 57.50, to the downside. Bottom line is, I think any kind of a retrace through the 60 level is probably going to offer anywhere between 60 and 65 in the early part of next week is going to offer a very, very attractive opportunity to short, because any kind of a retrace is almost certain to be reflexive in nature rather than a V-shaped type of retrace. Again, the story with UK, BOE very dovish. They're not first to hike at this point. BOE has been very, very cognizant of the low inflation rates in UK, and has even asked, the thing that I think missed a lot of the market attention yesterday that I think is having a big impact is that despite the fact that the housing market is a serious problem for them, they're not going to raise rates to curb the bubble. Instead, they want macroprudential tools, which is sort of what the RBNZ did and the idea to be able to control loans and control credit through that means, and that means rates stay low, and that means the cable comes still further under further pressure. So overall, the UK data not nearly as bad, certainly much better than the rest of the European data, but disappointing. And the critical thing is it's not good enough for the BOE to be first to move, and therefore that puts the whole dollar rally and pound pressure to the downside on cable. The fact that we broke 160 very, very significant, and therefore any retrace back through the 160 probably offers a very decent opportunity for a short, at very minimum, just to test these lows again at 59.50 to see just how much support there is there. Looking at Aussie now, the COM dollars did suffer, but did not suffer nearly as badly. You can see that the COM dollars, for example, made only marginal fresh lows because they've been so badly sold off, over the past couple of months that, and as a matter of fact, they were staging a counter trend rally here. So this is essentially a pro-dollar reaction that we see in the market today, but on a relative basis, the COM dollars actually, I still think, have less room to go to the downside unless we have a fresh slew of negative data out of there than the European currencies. So in many ways, the COM dollar European currency cross, like the pound Kiwi, Euro Kiwi, all of those trades could still be in play as we go into next week on the idea that they have some relative strength. Let's take a look at the dollar CAD also, and then we'll take a look at the Kiwi dollar CAD. Taking out 112 level, very big level here. This is really key. I think next week we have the Canadian employment data. This will be very interesting because one of the things that could be fascinating here is if the Canadian data kind of supports the U.S. data in terms of the Canadians are starting to print jobs as well, then you will get this divergence between North America and North American COM dollars and European and Asian COM dollars. And there may be a trade here on a pro-CAD, anti-Aussie, pro-CAD, anti-Kiwi type of a trade. But for now, Loonie is just as weak as all the rest of the COM dollars. This was a very, very big move through the 112 level. And only change in fundamentals, I think, changes it around. For now, you have to believe that the trend extends all the way to 113 on the CAD, and CAD does not have any relative strength for the time being. And here's Kiwi, also showing the same kind of a weakness but relative strength, in the sense that the weakness we didn't even make fresh lows in the Kiwi as we did in the Aussie. So when you're looking at these trades, one of the things that I think is kind of obvious. Let me see if I can just pull this up. Let me see. So pound Kiwi certainly been a very well. I guess I got to type slowly. Oops. Certainly an interesting trade up, and now a big trade to the downside. And so a very, very interesting look here is a potential break below the 204s on relative COM dollar strength, right? So further pound weakness against the Kiwi. Pound Aussie, let me see if I have this over here. No, let me pull it up. Another interesting trade where the levels are pretty clear technically. So, again, I think the lows here are around 8,300. A break of the 8,300s in the pound Aussie opens up. This is essentially a topping formation, but it opens up perhaps further downside, maybe even all the way out to 181, 180. So they are curling up on a relative basis for further downside action as the week progresses. Another thing that I want to take a look at is let's just take a look at the euro. I think I'm going to have to pull it up again. Same theme, but just against the euro versus the... let's take a look at euro Kiwi. Since euro set fresh lows and Kiwi has not, we've had lots of choppiness here as they kind of adjust. But if you have a Kiwi rally, then this 160 level I think is kind of very interesting as a break to the downside. Basically, the side theme in all of this next week is that perhaps the commodity dollars don't fall as much as the European currencies, and that creates a relative strength trade as we go into the trade. The other thing that's interesting, of course, is you have this kind of a very bifurcated market where the yen is really performing well, right? And as I said, if we go to 110, that opens up a whole yen rally. But the yen crosses, especially the European yen crosses, right, with pound yen and euro yen, are actually pointing to the downside. So that's one of those other interesting things that that could be fascinating. If yen basically fails, sort of if we have a failure of yen, then the yen cross liquidation could be more significant here. And this 137 given in the in euro yen could take us all the way down to 136. And with pound yen, if we have a yen failure here, we could go right back down all the way to 173. So ironically enough, failure in dollar yen here could present some really interesting opportunities for further yen liquidation on the crosses. Not necessarily because yen itself would be so weak, but because the pound and the euro are relatively weak. But I think ultimately, the cleanest, best, most intelligent trades setting up early next week are the retrace trades. Any pop above 25.50 on the euro, any pop above 60 on the pound probably present some of the better risk-reward opportunities for a retest of the lows set today. So wishing you guys the best of luck, the best of trading. This is Boris Schlossberg, over and out.